Can you use SEO when investing in the stock market? Absolutely. Now, I'm not giving any financial advice today. Stock investing is a whole nother world from SEO. And generally these days, I don't do any sort of short-term stock picking, anything like that, and much prefer just indexing, because having delved deep into that subject a few years ago, the general consensus is most so-called experts cannot beat the market. And they charge huge fees. You're much better off just going with an index fund like the S&P 500. You can buy that very cheaply through an ETF that's got a tiny fraction of a management fee, as opposed to some sort of trust or private investment fund where the fees tend to be really big, and those fees compound massively over time. So loads of people out there promoting this fund, this strategy, that strategy, but real experts will very often tell you that indexing is the way to go. At least in my position, where I'm obviously 100% focused on delivering you value, doing my own projects, there are things where I've got this domain level expertise where frankly I shouldn't be wasting time picking stocks, and generally loads of studies have shown humans are really bad at picking stocks, even top fund managers, and again you might as well just go with the market anyway. The S&P 500 has delivered about 10% consistently over the last 100 years. That's including all the peaks and falls in that time. However, if you are wanting to actively invest in stocks and you're wondering how to get an edge, then yes, loads of hedge funds use basically SEO to try and predict stock returns. And I've done it myself in the past. So when I was more actively trading this is one of those examples where you think I'm going to explain this as being really innovative and you're going to be like, duh, obviously. But basically, start of the pandemic, I had at the time 1 or 2 shares from Zoom that I bought when they IPO'd. I think it was in the previous November. So they went public. I bought a couple. It was only about $50 worth, something like that. I was only playing around. But I noticed that was doing really quite well in the sort of build up to the pandemic. That sort of January, February time where we didn't really know what was going on. We'd heard rumbles from China and watching it spread through the tragedy of Italy, etc. And then of course stay-at-home orders and lockdowns around the world towards the end of March. So I'd watched Zoom stock going up, and of course there's always that sense of, am I late to the party? Well, I went on to Google Trends and I just saw this massive spike. In fact, if we look back at this spike now, it looks like the peak was actually in end of March, early April, so just slightly beyond the time I'm actually talking about. So I'm only estimating here. I'm not able to go back and find my trading documents from the time, but I reckon it was probably around here somewhere that I actually made this observation. Now, one of the major drivers of stock fluctuations is earnings reports. So I think it's on I've not done this for so long now, but I think it's on a quarterly basis that the earnings report comes out, and everything else before that is basically just prediction. And yes, some active investors will try and find ways to actually predict what those earnings results are actually going to be. But remember, the vast majority of people are quite passive, quite lazy. So it's not really until the earnings report that we come out and find out, this stock is actually not worth that anymore, or it's worth a lot more than we expected. So if you can get any insight beyond that, ahead of that earnings report, then you can be in a very powerful position. That's why I've got all these laws against insider trading, but there's nothing wrong with using publicly accessible information like Google Trends. So in this case, I identified this spike. Now, I knew that this spike was still very much on the up. Google's only really just updating at the time, but I could see the surge in demand, which, like I say, was pretty obvious when you think about it. But remember, at the time, Zoom was just this business tool. We didn't really think of it for personal interactions. And I knew I had an advantage here because I could get actual data on that spike in demand, an absolutely huge spike in demand, as we can see here. This was ahead of any earnings report that was coming up. So at that unique historical moment, I was able to get in ahead. Now, like I say, it's really not rocket science to say if you bought Zoom early in the pandemic, you'd have probably have made some money. But in my case, there was that natural inclination of, am I too late? But actually, when I looked at the spike in demand with Google Trends, that's what really told me that this is really taking off right now at this moment. I've not missed the boat. So the result of that was actually I made several $1,000s, managed to get out at the right time, because remember, I was also able to see the decline in demand as well. So the end result was I basically made a few $1,000s in profit with that, and actually used that to quite heavily fund the expansion of one of my early websites, which I then sold for 43x its monthly profit and used that to launch my agency. So I definitely think there's something to be said about this. Now, Google Trends is one thing. Can we go deeper? So what I'd recommend in this case is actually looking for businesses that are publicly listed, they're traded on the stock market, but their revenue is highly dependent on organic search. So I wouldn't recommend going after, obviously, huge large cap stocks. For instance, Coca-Cola, where the Coca-Cola website could probably disappear from Google tomorrow, and yet Coca-Cola is not going anywhere. I'm talking about companies that are really dependent on their Google results, and that's going to take a bit of finding. But I'll give you just one example. The Future Group is a UK company, and they are traded, and they basically own a lot of household brands like TechRadar, for instance. So Tom's Guide, massive affiliate website, Mary Claire, PC Gamer, Homes and Gardens. Go Compare, did not realize that one. But if I go through all these are all media brands which I know are heavily dependent on organic search. So I can basically go through these websites and basically see how they're faring. So if we have a look at TechRadar, obviously it's a major household brand, so DR90, millions of traffic. But in terms of long-term trend, we can see there was this peak from late 2016 that started declining around to 2021. And we can see they were hit very heavily in the updates of the last couple of months. Just zoom in a bit here. So November 2021 onwards, seems to have been a pretty much constant decline, flat from January last year. Now, this is the group stock ticker as it stands. So, like I say, you've probably got to read, it's still unpredictable, you've really got to do some digging to find companies that are very heavily influenced on organic search. Obviously, there's no guarantee there's always going to be or ever going to be a correlation between organic search and stock price, but it's definitely something to bear in mind. If you can find a company where the majority of their revenue comes from organic search, maybe it's a publisher, something like that, or a really innovative tech firm, I don't know, then the chances are you can get a good idea of what's going to happen to their stock value in the wake of a recent Google update, whether they've gone up, they've gone down. Let's have a look at Tom's Guide. I wouldn't be at all surprised if they were one of the sites hit in the recent updates. Yep, there we go. So, September 2022, bit of recovery middle of last year, but largely it looks like decline. So I wouldn't recommend shorting as a strategy, but if you did see a site got tanked by an update or for unrelated reasons, then again, you might actually be able to trade that stock on the basis of your knowledge from the Google rankings. So really nothing that revolutionary here, but yeah, hedge funds use tools like Google Trends. And if you are in the field of SEO, you're used to looking at websites, you've got an Ahrefs subscription, then why not use that advantage for your own investment purposes? Because the chances are you can get that kind of insider knowledge that the vast majority of the public and other people trading that stock are just not going to know about before they actually know about it.